Here we go, everybody. Dow is down 239 handles. What I want to show people in the tape is how the tape is quote jammed and not moving right now. That means that the selling was much harder than what stocks could keep up in the level two. So basically what I am going to show you is we had did a special for everybody on the S&P. The 1830 puts that we said that we were buying were up $5,500 and we're not coming out of them anytime soon. And that is your S&P 500. That is that $1,830 put that we talked to you about. And that's how you do it right there. We were trying to get more contracts early in the day on the 1830, but the quote jam is across the board in this tape. And the reason why I'm saying that, I'm saying it for this reason right here. Here you can see that S&P that we talked about was going to come down. Here is the $1,870 put strike price. And yes, you could say that we are doing okay. That's $5,400 there. And we have them out to sell at a higher price, because this is what's happening right here. And the whole indexes are getting creamed right now. So I just want to say one thing is things are going to get on sale here in a little while. Here's what I'm going to show. Once again, the Dow is just getting crushed. And we had told everybody on stockmarketfunding.com our analysis that we had did between the bear and the bull. And yes, the truth is here right now. And we have a lot of contracts, more than what we're showing you here. This one is about $5,400 profitable. This one here is about $5,500 profitable. And that's only on 11 contracts in these two particular different accounts. We got more, though, that is up much higher. And the whole thing about it was the bull and the bear, and this is March. And as I have said, you are not going to get a spring rally, because the spring rally, as we have said clearly, has already come and gone. Okay? And it has. So, once again, there are the put options in play. We got lots of put options at the 1870 strike. Everything that we told you before the fact, not afterwards. No. That doesn't make you money. Of course everybody likes it when it does it. But what good does that do them? Nothing. You ought to go back to picking strawberries. So, once again, on the 60-minute chart, and we are short, and there's a lot of names out here. I'm going to show you where it broke down up here at 1876. Again, I had said clearly to our bigger index traders that we have is that this thing was ready to take a nosedive, what we call a swan dive. The swan dive. And there it is right there. 60, 60, 60, 3 60-minute bars straight in a row coming down, and a 60-minute sell signal on top. But let me just tell you something right now. What I have said was these markets are not the same as calendar 2013, because they're not. And the live analysis is right where it should be, and you're going to find it right here, right now, stockmarketfunding.com. Here is what we were telling people. You go over here, and you look at the S&P. You look at there. It's on the site. 1830 puts. Entry and exits right there. Not only that, hey, calls and puts right there. Listen, there's lots of things that you can learn from us about trading the indexes or sector indices. But one thing about it is you can just type in the symbol and hit that search. You're going to find it. Now, listen, when we talk about markets being terribly, let's just say this. You go to the free trial tab, naturally right there. Get started with this right now. Go back up here to trading, open an account. Yeah, you can call us Mr. money man, because what are we going to do? We're going to give you enough money to get involved in the next bull market that's coming down the road, that is, toward the second half of the year. So go do everything, get in here, get with it. Listen, this is the S&P on a 60-minute, and I'm simply going to do a chart here and now, right now. Yeah, you heard me. And not only am I going to do it right now, I'm going to draw that trend line for you right now. Okay? And what I am saying, and what I have been saying, is in the month of January, you all know that the bear move was on starting January. Then the bull move came in February. And now that bear is working right now for the third month of the new year. But let's not forget that today's date is 3/13/2014. The time is 12:17 p.m. What? Pacific Standard Time? Well, how about that? Now, let's see what time it really is. Now, listen, when you start looking back over here, and I can tell you that 1780 is where we're going. And even so, of course, it's not going to go parabolically down, but you can see right now, right here, right now, Dow's down 242 points. Nasdaq is down 65. That's Nasdaq 100. The Nasdaq Composite down 75. S&P 500 is flirting around with that 1843 handle. And where might that be? It's right here, right now, at a 60-minute, 200-minute period moving average, minute period. And you have a very good 60-minute sell signal working right now. And as I have said very clearly, and here's the part that I was clear about, and I want you to know it, because if you don't know it, you're never going to know it. So get with it, and let's let you know it right here. This is an early indication between the bear and the bull. And the bull is very strong. Don't get me wrong. They are very strong. But let me tell you something. We got spring coming up, and you're not going to get a good spring rally at stocks making indexes up at 52-week highs. It's just not going to happen, because last year the bull had a great year. The thing about it is, though, this is the beginning part. Here's January. February, the bull came running back in, and we're right here, right now, with another monthly chart starting that reversal down. So it's going to be very interesting as to which one is going to come out ahead. Is it going to be the bear, or is it going to be the bull? Is it really the bear coming out ahead? No. We were long overdue. And like I said before the year on stockmarketfunding.com, if you really want to get with it and work with the real true reality, then go see what we had to say before 2014 started. And not only that, we told you and everyone else that the price volatility is going to return to historical norms within the high frequency program, and that is the way a market should be. And I want you to know it right now that you're down 253 Dow Jones. Look at S&P right now, still at 1842, and it's selling. And another thing here and now, we do have sells out here, but we're not sure. There's that profit. It's still climbing. And let me tell you, that's only on 6 contracts. And I don't even want to sell. I'm going to cancel my sell order right now. I'm going to cancel that one, because there is another 5 or 6 grand that we can get out of this one. And that's the 1830 put that we showed you on the site. And we can, but here's the thing. Here is the thing that you need to know. Listen, when you look at this monthly chart, it's early. This is only one day, one big trading day that has the most downside gain. The bull will never give up right away. They never will. And the bull has a lot behind it. But right now, what you need to learn how to do is take advantage of these moves. And basically on the 60-minute chart, tomorrow, we got a 60-minute sell signal. So in a very short macro time series is yes, it is true. We're getting a little bit oversold. That's fine. We still have some room to go down here where this trend line is, and this is where we started out the month of February. I mean January right here. And we went all the way up and we made new fresh highs as we did. And right now you got a torpedo, you got a swan dive right there. So basically what we're going to do, and we're going to do the right thing, out of these 6 contracts here, we are going to sell 3 of them. Or yeah, it would be 3 to take a little bit of money off the table. We're not greedy. And you can see that right now these contracts are 2840 by 2690. So I'm going to show you how to limit out here, and I'm going to show you how to get the other side to try to buy it. And here's what I'm going to do. I'm going to hit sell. Watch. There it is, $28. Put the order out there. Ah, it didn't take him long to hit me, did it? See how I worked him out of there? I got him to pay up. Oh, yes, I did. Don't say I didn't when I just did. And that's the order, $28. We'll keep the other 3. But once again, you got to know when to offer out a little bit of something. That's good, because what we are going to say now is the following. We want you to know that there will be some short-term bounces. These are 1870, and we have 5 of these working. We're not selling none of these. As a matter of fact, the only way, and I had an order out here to sell. I just canceled it. Yes, I did. I had an order out here at $47.50. I'm not going to sell it at that price. If in the next closing half an hour bell, if I get 52.5, 52.50, that's here and now, 52.5. I will sell 3 there and keep the other 2. But I am going to maximize the profit potential. So here's what we're going to do. We're going to go sell. That's what we're going to do. And yes, you never can go wrong with taking a profit. We don't get 52.50, then we're going to stay the course. Because tomorrow morning, if we gap down, that's okay too. So that's the big move down. You just seen, and I'm going to throw a 60-minute in here in the Dow. Yes, I am. You want to see a heck of a reversal. Look at that. This was on 3/13/2014. Oh, yes, it was. But not only that, I want to draw that trend line. Look at it. Here it is, off that bottom. Yes, let us not be in denial that that's a double bottom. Let us not be in denial that we're short-term oversold, because we are within this time frame. Look at the big engulfing bar that happened over here on 3/4/2014. That means that big up bar with the bull, that these full 60-minute bars took that out by more. And so that's just the Dow. I want you to know one thing about the Nasdaq Composite. The Nasdaq Composite right here, it's sitting right there on my pivot line. This was the high. The Nasdaq Composite, for the first time in 13 years, has acted really super good, I can tell you. But remember, for new buyers to come off the sideline, this little one-way ticket type of stuff with the high-frequency algorithm, supercomputers buying up all the indexes at one time and doing all of that, well, that just doesn't cut the cheese. And the thing about it is, great markets are made both with the bull and the bear, and one gets a little bit more and the other one gets a little bit less. And what are we here to do? We're here to referee the whole move. Once again, it's who of you to take advantage of looking at everything that we put out before the fact, before it ever happens. You know, you can sit there and watch the clowns on TV. Oh, yeah, I love it. Oh, what do you mean you love it? You didn't love it before, but you love it now. Yeah, okay. Well, 98% of the world is that way. And I hope that you, my friends, are not going to end up that way. So we can clearly see that Dow points with 10 minutes, 9 minutes to the close is down 218. We were down 255 handles there, as everyone can see. 1847 on the S&P. We took a little bit of profit off of there because it's an April 19th contract. And with a reversal, we get some follow through tomorrow, then, we're going to take whatever it's willing to give. But we did take some money off of there, and we kept the 1870 S&P April 19. We left that in its hole. And we have other contracts that people have been buying, going even out much further, like down around the 1640, 1660, going out several months in the front and buying the calls in the front end. The back end is for the longer haul. So we are happy to say that, once again, a pullback is always welcome because the bigger bulls, they are not buying nothing until we get a really good pullback. And let me tell you is that they're not going to get any more money from those big bulls unless we get at least a 10 to 12 and a half full percent index across the board reversals. That is when they're going to come off the sideline. Until now and then, we're just going to have regular participants. Mutual fund managers, you're going to have hedge fund managers, institutional intraday hacks. That's all that's going to be in the tape until these markets get on sale again. And there is one moment in this year that we are going to go down very hard, and then at that bottom we are going to go extremely higher. And I will be doing a special analysis as to what months are going to be, where that whole time frame would be, and what it would look like in 3 different scenarios. So if I were you, Brian Plain, stay tuned.